see you in person.
All right, thank you.
Okay, all the best.
Bye.
Great. Okay, we're now moving on to a panel discussion that I'm really excited about, and I'm sure you're, excuse me, all very excited to hear about as well. We're going to be talking within the broad theme of this AUHF conference, which is about new frontiers. A particular new frontier is actually the inner city and investment in inner city urban regeneration, and within that context, affordable rental. So I'd love to welcome my panelists onto the stage, please. We have there's Ilaria. Hello, Ilaria. I haven't seen you in so long.
Yes.
Nice to see you from the
Quite some
CDC
time.
group. And Carl from Diversity Urban Property Fund. You're in Johannesburg, correct?
That's right.
And then Paul Jackson from TUF. Hello, Paul.
Hello, Casey.
TUF is also an AUHF member, so really great to have you. Ilaria, thank you so much for your support for this conference. We're very grateful for the CDC support for the conference. We really needed it.
Yeah, we think it was worth it.
Well, thank you. So very good to have all of you here. And I'm really excited about this conversation because when I heard about this investment and when it was announced, an investment by CDC specifically into diversity and within South Africa focusing on affordable housing. I mean, I know that lots of people cheered inside. So now we get to cheer on the outside and talk about it a little bit more in detail. So in this conversation, what I'd like to explore is really the nature of the deal, how it worked, the perspectives of each of you. Carl, you can describe for us a little bit about what that looks like, what is the investment, and then Ilaria, from your side, really some perspectives on how you came to be able to make the investment, and what went into your decision making around that. And then Paul, you actually are here with many hats in terms of your role as the CEO of TUF, but also in terms of your role with diversity specifically, and so your reflection on that as well. Let's start with Carl, and please feel free to introduce yourself a little bit further. I've been quite informal, but to our audience across the world, introduce yourself and the fund and describe the investment, please.
Cool. Thank you, Casey. It's an absolute pleasure being here, and yeah, very happy to kind of run you through. So I think perhaps what I'll do is, sorry, I'm Carl. I head up the fund side of diversity that, as Casey mentioned, CDC have invested into. So I'll maybe just briefly kind of outline what diversity actually is and what we do as a company, and maybe just touch very briefly on the investment by CDC, and then I'll leave it to Ilaria to perhaps take that point a bit further. So in a simpler sense, diversity is a South African property fund that invests in affordable rental housing, and specifically in what we deem well-located precincts within South African cities. So we would typically develop our own residential rental stock, and then we'll hold it on balance sheet and rent it out. And at the moment, we own and manage just under 7,000 rental apartments and about 90,000 square meters of commercial, retail, and amenity type GLA, which is ancillary to the residential offering. I think what's quite important about diversity is that it's fully internally managed, and what we mean by that is that the fund structure that owns all the investment property also owns its own property, asset, and development management functions. So this creates really nice alignment between management and our long-term shareholders, but also prevents fee leakage, which is a challenge we often see in kind of property structures within South Africa and really globally for that matter. I think something that sets us apart from other affordable housing players within the South African context and arguably perhaps more broadly across the continent as well, is that diversity will exclusively only invest in residential rental stock that is well located and high density in nature. So a lot of the housing development that takes place in South Africa, and really by far the vast majority of housing development that's taken place affordable housing development specifically in South Africa in the last 20 years has been at the urban periphery, really far away from amenities and far away from economic opportunity. And in our view, that comes at a huge cost to society and also to the end consumer and to the environment for that matter. So by building housing in better located areas, which, the common misconception is, oh, there's no land availability and it's not possible, but respectfully, we beg to differ. There's way more development opportunity within, well-located areas in the South African context that we could ever, get to ourselves. So, happy to kind of talk to anyone who would like to know how that works, but you just need to build denser is the long and the short of it. So we think that there's huge opportunity to keep kind of densifying our cities in well-located areas through affordable housing, and this is important for a number of reasons. I've touched on kind of the social and the environmental aspects to it, but perhaps what I'll say in closing is that as a business, we really believe that this also makes good commercial sense. So well-located affordable housing, and what we mean by well-located is people have easy access to job opportunities, easy access to schools, clinics, and the kind of amenities they need on a day-to-day life, in their day-to-day life. Assets of this nature are really good investment-grade assets as well when they're properly managed. So we think that there's a lot of room for growth in the institutional investor market for, meaning pension funds, long-term insurers, and the likes, for owning affordable rental housing stock on balance sheet. And we think there's a strong case that can be made around why this is an attractive asset class for these investors. So happy to unpack that a bit more in this conversation as well. I think I'll hand over to Ilaria there to maybe just take us through the CDC investment. And
yeah, no, I mean, Ilaria, would be clearly you agree with Carl. So tell us a bit about that.
Indeed, I do. So actually, we invested $36 million, so I better agree to maintain some sort of consistency on that front. It's interesting because I was thinking earlier, we exchanged few emails about how to approach this panel and conversation, and I thought I had about 28 reasons why it's a good thing for us to invest in diversity. I assume that people know who CDC is the UK government-owned development financial institution. I'm the head of the real estate, but real estate here is more investment in what we call social infrastructure and business infrastructure. And part of social infrastructure is housing, affordable housing, of course. And how do you get into this market? I mean, it's very important. When we did the press announcement here, we were saying that we were going to provide, through diversity, of course, quality, affordable, and environmentally sustainable housing for low and middle income households in well-located neighborhoods in major South African cities. That's, if you like, condensate the investment. So we believe very much in the context of our impact. We measure impact also with inclusive urbanization. This is very important. It's basically access to jobs, housing, and services. And normally in cities, you have this very sort of informal and congested, low quality housing. Diversity is addressing this issue in many forms, and it provides quality accommodation in decent location, and mainly this is to the advantage of low and middle income households, which would not have much of an alternative. As we did some studies, some impact studies, and actually women, single parents, and young families are the ones that benefit more from the units brought to the market by diversity. So this is an element which is fundamental in our thesis, the thesis of our investment. Second is also scale, because I mean, Keshav, we've been talking about this for the last 5 years about how to achieve scale in affordable housing, and the problem normally when you do build to sale is that the issue, the lack of mortgages and so on and so forth. With residential, I mean, Carol, Diversity is already managing 6,500 units. Our investment should help in building and developing additional 2,500 units. We want to have an impact, but impact has to have scale to be meaningful. And these, we believe that diversity gives us this opportunity. We also environmental sustainable. So these are green buildings. I mean, probably people know or don't, but real estate contributes to 17% of carbon footprint. And this has to be taken to zero by 2050. So the environmental aspect is equally important to us. And what we build here in diversity is, I mean, I know that one of your sponsors is Edge. So we, we look at these kind of standards. Again, very important for us. Obviously, there's also a question of the quality of the partners. Carol was mentioning earlier that we are the only DFI in this investment. So most of all the other partners are private partners. Obviously, like-minded in terms of creating an impact, not just making money, but certainly gives you an idea of how attractive this business could be. We hope it will be even more going forward to institutional investors, and that's what we want to do. And obviously, again, the quality of the partners here, Itemba and Attenbury, and the management, that's quite unique as a proposition. And as I mentioned, again, the people that benefit mainly from these investments are lower middle income classes, and again, women, single parents, and young families. And I think that again, just to contextualize, just to give you the last little bit, is that the estimation that in South Africa the shortage of housing is about 2.3 million. So just to give you an idea of the scale of this. Moreover, this is more, so even if our 2,500 units, we do what we can. Actually, let's say we'll do much more going forward, and there will be a lot of follow-on in the investment, or a lot of capital attracted to this business. And finally, let's also mention this thing I like, that that the urban population in Africa is expected to triple in the next 50 years. So this is where we need to invest our money, and this is where we're going to make a difference. So I hope that I explain why we invested.
No, that's fantastic. It's very exciting, and there's a lot of points I want to come back to. Paul, I'm throwing you a little bit of a wild card here, because I think what would be really useful is if you could maybe just contextualize all of this. Where is this investment fitting into in the South African landscape? What is the inner city? What is affordable housing? There was a question on the chat asking about that. How does that all fit? Can you address that context?
Thanks, Kessie. I'll certainly give it a try. So I'm a co-founder of Tough, and we're a financing organization specializing in inner cities. We're an SME financing organization, so we're not a housing finance organization, but all our investments have a housing outcome. And we've financed just around 45,000 units to a value of just over 7 billion Rand over the last 18 years. The diversity investment was extremely appealing simply because it does focus on neighborhoods and precincts. And I think the second part of it is that it really gives content to the concept that housing is part of the real economy. It's a thing that stimulates local economic development. And if you go to the diversity precincts, you can see that there's been that stimulation of the real economy. Shops, schools, call centers, those kind of things starting to come in to an area that was essentially underused. And I think that in the context of affordable housing in South Africa's got a massive urban sprawl problem. Affordable housing has usually been done in big projects conceived on narrow budget rather than broader fiscal kind of considerations. And most of it is very, very spatially and economically far away from any attempt at integration. The diversity development takes place in an area where there are a lot of other smaller scale providers of housing. And it was a massive impetus simply because it brought that scale. And I think that the important part of it is that it's a classic case of using existing infrastructure. The great thing about the diversity development was there's a lot of repurposing of buildings, taking it from one use and putting it into another. There was quite a lot of new build as well in between that. And then there was some upgrading and refurbishment of existing residential, but mostly repurposing, using the same roads, the same service pipelines, and mostly the same administrative overheads. So you didn't have to create these new, massively expensive, cost-ineffective structures to maintain new developments. If we get back to the concept of affordable housing in South Africa, it's kind of a concept that I always think less definitions better than more. and it's not for the very poor, but it is certainly for poor and moderate income houses. You know, it's sort of in the South African context, 6,500 Rand a month and below, going right down to 2,000 Rand. And at rule of thumb, 15 Rand to the dollar, you can work it back that way. But what it does is it gives a range of choice to tenants. And often the concept of affordable housing is that a quality affordable housing is about the unit and the finishes. And what diversity does, which is critically important, is it extends that to the property management. In other words, the customer service and the management of the units, and then extends it beyond the front door of the building to the precinct. And if I can just make one last point, is that if you're worried about inclusive growth, and in South Africa, this is an absolute national priority, this is necessarily a microeconomic, local economic concept. And so what you're doing is bringing people into very well located areas, access to physical infrastructure, reusing physical infrastructure, access to social infrastructure in a way that stimulates an inclusiveness in the economies. And I'm going to leave it there, other than to say you have a big developer with medium-sized and small developers all changing the face of this inner city area, with diversity making a fairly large step forward in that respect, and showing you can do in-city and inner-city developments at scale. You don't need to go to a far-removed place to buy cheap land so you can get scale. You can actually do it where it really needs to be done. And I'll leave it there, Kessia.
I think what's so interesting about the approach, and to even get our heads around it, when we talk about green, we often talk about, or we imagine it's about renewable resources. It's about the sun, which shines beautifully, and can we bring solar in or whatever. Well, here what we're doing is recycling, right? So we're using existing infrastructure and existing spaces, and Carl, you've repurposed that and brought residents in. And that has both an immediate impact on the urban environment, the physical, the built environment, but then also the social environment, because it changes the whole. So it feels to me it's a broader application of this notion of green. But maybe you could talk a little bit about that, because I think that's what people would be really interested in, is how you achieve the green broadly and specifically.
Yeah, thanks, Kesha. I'd happily speak to that. I mean, you've touched on it now, but I think it's really hard to overstate the importance of stopping sprawl and densifying our cities. And I'll move on to the green aspect in a moment, but just briefly to the point that Paul made, South Africa, like most countries in Africa, is, finds itself in a developing context, which means it's a fiscally constrained environment. And there is a huge amount of evidence globally about the cost of rolling out infrastructure in a sprawling context as opposed to a denser configuration. So this both applies to upfront bulk infrastructure going in, so roads, sewers, electricity, water, all of that, but also the cost of maintaining that infrastructure over the long term. So maintaining those roads and the sewers, etc., but also providing ambulances and fire trucks and policing and cleaning services, all of this. So the point is, for a fiscally constrained government, which most governments in Africa are, the cost of sprawl is huge directly to the fiscus, right? You can quantify this. It's more expensive to have sprawl than it is to have denser cities. But then moving on from that, you know, we could speak at length about all the various social benefits that come from, you know, people being closer to where kids go to school, closer to recreational amenities, etc. But to speak specifically to the environmental dimension of this, we've just recently published a piece of research that we co-commissioned with the Green Building Council of South Africa. I'm actually at the Green Building Convention tomorrow presenting this research if anyone is dialing in for that. And essentially what it sought to do was to look at the life cycle carbon impact from building urban peripheral residential development as opposed to urban core residential development. And we looked at it both in terms of low income housing and middle income housing. And the results are astonishing. I mean, it is hard to overstate how much more carbon intensive it is to have sprawling urban development, specifically in terms of residential, than building more densely. And really it comes down mostly to transport emissions, but there are other forms of emissions as well that we capture within what the research defines as life cycle emissions. So the ways in which people use their properties, the amount of time they spend within it, even the embodied carbon in the units differ, because typically you find that people build bigger units and there's more shared everything for sprawling urban form. If you think about it, you've got more kilometers of road per unit in a sprawling city than in a dense configuration, much more, like an order magnitude more. So the point is, if we are serious about the net zero point that Ilaria made by 2050, I just simply cannot see that happening if we are continually building affordable housing at the urban periphery. It's socially unjust. You're locking people into poverty by doing it. You are massively impeding on their quality of life. It's a disaster for the fiscus of any local government, but equally, it's also incredibly unsustainable to do it. And I think, you know, this research shows it very clearly. So I'll happily share it with you, Keisha, if you want to share the research with the audience.
We'd love to, absolutely. And if it's available online, and even now we can put it into the chat and just share it that way too. But otherwise, we can put it into the report. One of the things I think that we've each of us in our different roles have been grappling with really is how do you build the argument so that it's compelling? And Ilaria, I wonder if you can talk about this a little bit, because I know that the process of arriving at the investment in diversity was one of where you were busy gathering data and building the argument and working out, well, what's the backlog, and you commissioned research and so on. In the process of going through that, what were the things that you succeeded in from a data perspective, and the argument that you were trying to make for your investment committee to put this deal through, and what were the data challenges that you struggled with? Ilaria, you're on mute.
After 2 years of this, I'm still keeping the mute button. Anyway, you know, information gathering is always a challenging. We live in very imperfect market, as in how do I get data, etc. Actually, South Africa, if you like, is certainly better than most of the other countries in Africa. However, what the kind of information we're looking for are not easy to get, and so we commission, as I said, we commission something more kind of commercial, kind of due diligence, which is looking at, you know, demand, supply, whatever, which was not the easiest in terms of looking at what, I mean, especially the development of demand. If you like, what Carol and Diversity are doing is quite innovative. So there is history? There is, but is there enough history also? Because one of our largest development was coming to market while we were investing, basically, and that the ultimate sort of inner city. This is dual city, of course. And so how long would it take to stabilize? What demand would be there? Certainly, all our predictions were partly skewed by the pandemic, of course, and sadly, like everybody else has been affected by this. But again, we looked at how solid and sustainable is the demand going forward. this is a long-term investment for us. And I think that was challenging, because obviously you look at demographic, you know that, as you know, in South Africa, a lot depends also where do you sit, because I mean, part of the housing is funded by government, the very low of the pyramid. Then you have fleece. I mean, I'm not going to get into that, but obviously you have to look, how do you position yourself? Are we positioning ourselves in the right, is diversity positioning itself in the right place, basically? So all of this was part of our due diligence. There was also due diligence about as I mentioned earlier, who benefits from this housing, this unit housing, and that was equally important for us, and because of our impact mandate, and therefore was about. And as I said, I mean, actually, the study was very interesting because is the population and the age, the gender, all this stuff was quite interesting. I think I have to confess that at the end, a lot of questions from IEC were not so much about the thesis and the good that we were doing and planning to do with this investment, was more about its market, is South Africa, leverage, you know, the basically kind of commercial issue rather than, I mean, I think that everybody was quite very well persuaded about the meaning of this investment and how it fit in CDC mandate. But then there was all the issue. Again, don't forget that we invested right before the third wave, and we, together with the team at Diversity and the board, because I mean, Paul was very helpful as well, did this investment through the pandemic, which was, I mean, I haven't traveled to South Africa for 2 years, so it took quite some time, but it was very challenging. But anyway, we did manage to get it done, and so hopefully here we are.
Well, yeah, I mean, it is remarkable, and you had to manage a whole range of different ways of working because you weren't able to come and visit, and I'm sure had to rely on a whole lot of information that Carl and others were giving you to make sure that it was going in the direction that you were wanting. Yeah. Olu has just asked a really interesting question, Ilaria, and I know that you and I have talked about this as well. He's asking, what are the operating environmental factors that were unique to South Africa that makes this investment viable compared to other sub-Saharan African countries? So the investment is in South Africa.
Yes, I think that there are very few countries in the continent where you have developed, well-defined by the government, affordable housing or low-income housing. So South Africa has a framework which is quite clear in the definition of the various, and I mean, you are the expert, Kirsten Paul, so correct me if I'm saying something which is not real. But anyway, so there is a framework which is very important for us, and this framework is regulated, and there are specific agencies and rules there. Secondly, again, this is quite something that we have been talking about for years, is that at the moment, we are really focusing on rental platform, because I mean, we believe that that is the way you can unlock the market. We looked at developers that obviously there's a lot of people we like, for example, in Kenya or in Cote d'Ivoire, but these are very small size developers. And one development that we all like in Kenya took about 10 years to actually develop and sell 500 units. So, and you know, and there's no such thing as, you know, there's a lot of property management to be able to make a rental platform viable. In South Africa, there are few. Another one is International Housing Solution, which we've been talking to for quite some time. But then Diversity was offering this opportunity to basically enter into the rental market, which again, we want to make an impact, but the impact has to have a scale. And so I think that what is unique in South Africa is that because of the framework, because of the expertise in property management and so on and so forth, we were able to make this investment. We are looking at, if possible, backing similar rental platform in other countries. I mentioned Kenya and probably Cote d'Ivoire, but for the time being, this is where you have it.
Wow. No, I mean, and it's something that, one thing that you said earlier was that you're hoping that this investment creates a set of precedents that then will allow for other investment to crowd in. And Paul, I wonder if that's something that you might comment on, just your perspective overviewing the whole sector and your own capital raising efforts as tough, and then what you've watched in terms of your role with diversity. What is the role that this particular investment will play in changing that investment landscape for this kind of development and investment? And are there things that we should be doing now to improve the climate further?
I think before I tackle that, I'll go back to Olu's question. I mean, I think one of the other things that's unique in South Africa, perhaps, and I don't know, is that many of our inner cities have got urban decline. And consequently, you're buying buildings at below cost of replacement. And it makes the case for repurposing that much more credible. I think that the investment in diversity isn't only about, and I think credit to diversity and to CDC, about bringing a foreign DFI in, but there's an enormous amount of private sector funding in this through the commercial banks and through asset managers. So that there's an enormous amount of leverage going on. You know, Tough as a non-bank financial services company does bilateral debt and does quite a lot of securitized financial structures where we access the capital markets being the major source of capital. But what we're seeing in the diversity case, not only from the investors, but also from the equity investors, but also from the debt investor side, is that there are three of the major banks in South Africa. We only have five, invested in diversity, and you are seeing that there is in the landscape a understanding that this asset class is worthy of investment. And I think if you want to boil it right down, it's that. Now, of course, we have all been affected by COVID, and many of the inner cities businesses have worked remotely and those kind of things, which has affected diversity and affected Tough's client base. But what you're finding is that increasingly people are starting to move back to the cities, employment is starting to stabilize, and you're getting that effect that the asset class and the underlying cash flows of the asset class are an investable proposition. I think that's incredibly important. If I can just steal 1 minute to go back to your data question, you know, all along Tough has made its investment decisions based on broad data, census data, those kind of things. South Africa, unsurprisingly, is at the peak of its urbanization demographic trend, to the extent that we believe that over 70% of South Africans will live in cities by 2025, in just a couple of years. But the state of data available around demand, around product, all of those kind of things is not good. And in South Africa's instance, the public sector investment in data is simply woeful. It is not a priority. And it's the old saying, if you don't know where you're going, any road will take you there. And South African, our public sector investment, both from government level and from local DFI level, is simply woeful. And I think that an investment in that would make the case for other investors, if we knew what demand looked like, if we had any idea of income elasticities of demand, price, any of the kind of standard measures that you would expect to see, it would make the kind of very anecdotal basis on which we commit billions of rand that much more defendable. And I'm not talking about diversity, I'm now talking about tough and a lot of the information. So, and we would be able to get an idea of these fiscal and demand and cash flow diversity issues that are so important for an investment case. Notwithstanding that weakness in our country, we've managed diversity have certainly taken us a big step forward.
You know, you say that and it completely tears at me, because on the one hand, I'm like, well, no, we're trying so hard. And that's exactly the space that CAF is working in, and that the AUHF as well is committed to addressing, is to fill that data gap. I think there's a critical issue around public sector investment into it, and the notion that that's a critical part of the enabling environment. And making it so that that data is at hand, that we can immediately say what the issues are. And Ilaria, as you said, the anecdotal argument to make is actually, that's the easy one. That's kind of obvious. Photographs work, and you know, it's like there is that. But really, what does it mean? And I want to pull it a little bit back to you. And then in our last few minutes, also take one shift out of South Africa, is that the thing that I think is so critical about this investment, well, one of the things, is that we really have an opportunity now to be collecting data as well around the progress of this investment, so that we can demonstrate that case forward. And then to think, well, can we leverage this experience to start to explore other inner city neighborhoods? Paul, you make the case about urban decay. It actually does exist in very, very many other cities across the continent. And I don't have the data to tell you about the value of those buildings, but it looks to me like those are buildings that would be undervalued in terms of the use opportunity there. So inner city Dar es Salaam for me has always been one that I think would be a great area to invest in. Abidjan as well, in Cote d'Ivoire, lots of rental accommodation there. And yeah, I wonder if you might all comment on that. Ilaria, let's start with you, because you mentioned that's something that you're thinking about long in the future. How will you make that closer to now?
Oof. We just invested after 2 years of struggling. Not easy. Let's say that for the time being, what we're looking at is, can we replicate the rental platform rather than can we replicate the model of urban regeneration, downtown regeneration? Because partly I agree with Paul. I mean, in particular, Johannesburg has a very specific history in that respect. So at the moment, also what other are looking, probably you're aware of this, that IHS has actually closed a fund, rental fund for Kenya. So things like that, but this is based on new development, new units. But still, I think, again, unlocking the market that works. I think that I would love to do this because, I mean, again, if we take the sustainability that you mentioned before and Carol spoke about, is we think that this kind of investment, the one with the urban regeneration, is also change the dynamics of cities. And so you contribute even more. Actually, this is one of the most interesting things I've ever seen and done and invested in my life, frankly. It's quite unique. So is there something similar elsewhere? And also, but are there the operators? Because again, I mentioned earlier, one of the big plus point of this venture is the credibility and track record of the partners. And as you know, Itemba has been doing this for years, successfully for years. Attenborough is one of the best developer in South Africa. So can we get something similar? I'm not saying we should not look for it. Also because, again, if we go to sustainability, it's also the fact that retrofit is certainly much better, much more environmentally friendly than new builds by definition. And so we should really try to make it possible elsewhere. Let's see how this one goes, and then start touring in other countries to advocate for it. But yeah, we should look into it. But again, challenging, I would say, right now.
I guess if the question is too early for you, Ilaria, then the question is perhaps really too early for Carl, because he's got all of these units in Johannesburg.
You need to make this one work first for me. So
exactly. I mean, we're going to be here a long time. That's clear. But Carl, are you thinking about like beyond where you are right now?
Truthfully, not right now, and I hope Ilaria will be relieved to hear that. But yeah, the scale of the opportunity in South Africa is enormous, and we really would like to just kind of make a proper beachhead here. But you know, it would be fascinating to go and explore this model in other countries. And from an academic curiosity point of view, it's certainly something that interests me. But practically speaking, I don't see us getting to it in the next few years. I just wanted to come back to one quick point briefly in this last minute that we have around the value of CDC's investment in diversity, because I think it's something that's often overlooked. What was the gentleman who spoke before us briefly? Sorry, I've forgotten his name now.
That was Olu Olanrewaju from Altair.
Around the maturation of kind of REIT markets kind of across the continent. Now, if you look at the listed property sector in South Africa, residential assets account for less than 1% of the total assets on that in that investment universe, right? It really is essentially a rounding error. Residential investment grade property in South Africa. So the consequence of that is that the institutional asset management industry in South Africa really doesn't understand the asset class yet, for no fault of their own. I mean, like it just doesn't matter to them. And so what we're seeing is, Paul mentioned the large South African commercial banks who fund us from a debt point of view, but the equity market for kind of large scale residential rental investment is still very underdeveloped, and we find it very difficult to raise equity domestically. And in order for us to generate the data that Kesia, that all of you kind of have referred to, and in order for us to be able to demonstrate over a period of time the kind of investment fundamentals of this asset class, we need to crowd in equity that plays an almost catalytic role in assisting us to generate this kind of data base, really, and I use the word base in a punny sense. So I think the value of CDC's investment in diversity is enormous in that it allows us to continue building out both scale within our business, and it gives us more time through which we can demonstrate what we really believe are very strong fundamentals of this asset class, and fundamentals that should appeal to long-term investors like pension funds and life insurers. But we are struggling to kind of demonstrate it because we just don't have enough stock to point to and say, look, here is 10 billion rands worth of assets that demonstrate this case. So in that sense, I think we've still got quite a while to go. We need more equity in this space to be able to do that.
So Paul, the job for us is then to we got to write it down. We have to catch all of this and find a way to then share it. Carl's going to go and manage and make sure that the whole fund works, but we got to write it down so that we can share that more broadly. That point about data, Paul, is an absolutely critical one, and hopefully that sessions like this help share that information. I wonder if you have any closing comments for us. We've come to the end of our discussion here.
Well, just to say that TUF has been approached repeatedly about expanding outside of South Africa, and we've decided not to do that for now, but in the future. But I would like to say that, in a city, Dar es Salaam or Cote d'Ivoire, there's got to be a lot of things in place. But I would like to just make two closing points. The first is the belief in the ordinary person when you're talking about, because this is a spectrum of investors, perhaps a diversity on the one side and the smaller person on the other. And that's a real problem, particularly in the South African context, that local knowledge is in fact what you investigate. And then the second is South Africans have a massive propensity for ribbon cutting opportunities. Whereas this is really about managing lots and lots of smaller projects, some bigger densification projects, in a way that gives you that repurposing and densification and all the things that we've been talking about. So I'd close with, don't forget the ordinary person, particularly the entrepreneur. They are a remarkable group of people in South Africa. They are seriously underestimated. They are many more than people think they are, and they are part of the solution.
Absolutely. It's a point that we make in our yearbook, which we launched today, is this power of massive small, which is a phrase that Paul, you and I toss back between ourselves quite a lot. And that when you start to look at these niche opportunities, the inner city itself is a niche opportunity, and you repurpose or you expand and you engage with different forms of activity that are happening around place that are targeting affordability. That's, I think, where the magic starts to happen. This has been really a great panel. Thank you so much. Congratulations on the investment, and good luck in carrying it forward. More than good luck. Good wins, I suppose, is the best way to put it. And we really look forward to hearing more. I'd like to connect with each of you separately around how we do write it down so that we can share it on an ongoing basis, because I think it's really important, and I think that there's a huge audience for this. In fact, that's going to be the topic of the next session, which is starting like right now. So let me say goodbye to all of you. Welcome you to please listen to the next session. We're talking about data and supporting investment in this context in Kenya. But thanks so much for your time this afternoon.
Thank you.
Thank you, guys.
Okay. All the best. Bye-bye.